Based on the historical data and forecast, Bitcoin has shown a generally upward trend, though with significant volatility. The recent RSI values have fluctuated, indicating periods of both overbought and oversold conditions. The forecast for the next week suggests continued price movement, with potential dips and recoveries. Considering the support price of $108,300 and the resistance price of $119,800, and incorporating the RSI and Bollinger Bands, I recommend a combined strategy focusing on short-term swings. First, I suggest an RSI-based strategy. When the RSI drops below 20, indicating an oversold condition, we can enter a long position at $117,300. The stop loss should be set at $116,900 to protect against a deeper correction, and the target price should be $118,000, capitalizing on the anticipated upward movement. Second, I suggest a Bollinger Band strategy. When the price touches the bottom of the Bollinger Bands, we can enter a long position at $117,300. The stop loss should be set at $116,900, and the target price should be $117,800. Finally, I suggest a combined strategy that integrates the RSI and Bollinger Bands. When the RSI drops below 20 and the price touches the bottom of the Bollinger Bands, we can enter a long position at $117,300. The stop loss should be set at $116,900, and the target price should be $117,800. This combined strategy offers a higher probability of success by confirming signals from multiple indicators. Based on the historical data and forecast, Ethereum exhibits a strong uptrend. The price has consistently broken through resistance levels, and the forecast predicts further upward movement. The RSI consistently rises above 50, reaching over 80 in recent days, indicating an overbought condition. However, given the strong uptrend, a slight pullback to the support price of $3,240 could present a strategic entry point. We will employ a combination of RSI, Bollinger Bands, and support/resistance levels to maximize returns. Our strategy involves a long position with an entry price of $3,240. The stop loss will be set just below the support level at $3,100 to protect against a significant downturn. The initial target price is set at $3,400, aligning with the forecast for July 19, 2025. If the price continues to rise, we will adjust the target price to $3,560, based on the forecast for July 21, 2025. Finally, if the price continues its upward trajectory, we will set the final target price at $3,860, based on the forecast for July 23, 2025. This strategy combines trend following with risk management, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, XRP exhibits a clear upward trend. The price has consistently moved above the support price of $2.84, and the forecast suggests continued growth. The RSI has been largely above 50, indicating bullish momentum, with values exceeding 80 on several days, suggesting overbought conditions. The Bollinger Bands have also widened, confirming increasing volatility and potentially indicating a continuation of the upward trend. My strategy is to leverage this momentum with a combination of RSI and Bollinger Band signals. I propose a long position entry at $3.33, coinciding with the first forecast price and a potential pullback after recent overbought conditions. A stop-loss order will be placed at $3.10, just below the recent low and the lower Bollinger Band, to limit potential losses. The initial target price is set at $3.98, aligning with the final forecast price and a significant upward movement. To refine the strategy, I will incorporate RSI and Bollinger Bands indicators. When the RSI dips below 30, which is below our 20 oversold level, it signals a potential buying opportunity. Conversely, when the RSI surpasses 70, which is above our 80 overbought level, it suggests considering a partial profit-taking or a short position. Furthermore, when the price touches the lower Bollinger Band, it indicates a potential buying opportunity, while touching the upper Bollinger Band suggests a potential selling opportunity. Combining these signals, I will adjust the initial strategy. If the RSI falls below 30 and the price is near the lower Bollinger Band, I will add to the position at $3.20, maintaining the stop loss at $3.10 and adjusting the target price to $4. This layered approach allows for maximizing profits while mitigating risks in the dynamic cryptocurrency market. Based on the historical data and forecast, BNB shows a clear uptrend. The price has consistently broken through resistance levels, and the forecast predicts further increases. The RSI has been fluctuating, but recently moved above 60, indicating strengthening momentum. Considering the Bollinger Bands, the price is currently near the upper band, suggesting potential for a pullback, but the overall trend remains bullish. Therefore, I recommend a long position with an entry price of $725. To manage risk, set a stop loss at $717, just below the established support level. For the target price, aiming for $768, aligning with the forecast for July 25, provides a reasonable profit margin. To refine this strategy, I suggest incorporating RSI signals. If the RSI drops below 40, consider adding to the position at $733, with a stop loss adjusted to $725 and a target price of $762. Conversely, if the RSI reaches 80 or above, consider taking partial profits at $743. This dynamic approach allows us to capitalize on both the prevailing uptrend and potential short-term fluctuations, maximizing returns while mitigating risk. The portfolio will be 60% of the long position with an entry price of $725, 30% of the long position with an entry price of $733, and 10% of taking partial profits at $743. Based on the historical data and forecast, Solana exhibits a clear uptrend. The price has consistently moved above the support price of $168, and the forecast indicates continued upward momentum, reaching $187. The RSI has been trending upwards, fluctuating between 48.2 and 70.4, with a recent push above 60, suggesting increasing buying pressure. The Bollinger Bands have been widening, indicating increased volatility and a potential for further price movement. We will implement a strategy combining RSI and Bollinger Band signals. Our strategy involves a long position with an entry price of $172. Given the uptrend and forecast, we will set a stop loss at $168, just below the support level, to protect against a potential reversal. Our initial target price will be $184, aligning with the forecast high for the week. If the price breaks above $184, we will adjust our target to $187, capturing the full forecast potential. This strategy aims to capitalize on the ongoing bullish momentum while managing risk with a well-defined stop loss. Based on the historical data and forecast, Dogecoin shows a clear uptrend. The price has consistently moved upward, breaking through resistance levels and exhibiting strong momentum. The forecast for the next week predicts continued growth, with prices reaching $0.259. Considering the RSI values, which have been consistently above 50 and nearing overbought territory, and the Bollinger Band showing the price moving towards the upper band, the overall trend is strongly bullish. Therefore, I recommend a long position strategy focused on capitalizing on this upward momentum. My strategy will be a hybrid approach combining RSI, Bollinger Bands, and support/resistance levels. We'll enter a long position at $0.222 on July 19, 2025, coinciding with the first forecast price and a relatively low RSI value compared to recent days. The stop loss will be set at $0.202, just below the established support price, to protect against a potential pullback. The initial target price will be $0.251, the recent resistance level. If the price breaks through this resistance and continues upward, we will adjust the target price to $0.259, aligning with the final forecast price. This strategy balances risk and reward, leveraging the bullish trend while incorporating protective measures against downside risk. Based on the historical data and forecast, TRON exhibits a clear upward trend, supported by consistently rising close prices and a gradual increase in RSI values. The RSI nearing 80 on July 18 suggests a potential short-term overbought condition, but the forecast predicts continued price appreciation. I propose a phased investment strategy capitalizing on this momentum. Initially, enter a long position at $0.321, leveraging the forecast price for July 19, set a stop loss at $0.302, aligning with the established support level to mitigate potential losses. The initial target price is $0.333, corresponding to the forecast price for July 21. If the price reaches this target, consider taking partial profits while maintaining a smaller position with a revised target of $0.35, the final forecast price for July 25. To refine this strategy, incorporate the Bollinger Bands. When the price touches the upper band, consider taking partial profits. When the RSI falls below 30, enter a long position. The combined strategy will create a portfolio with the most efficient elements of all three strategies. This approach balances risk and reward, capitalizing on the prevailing upward trend while employing technical indicators for precise entry and exit points. This will maximize the potential for high returns while minimizing downside risk. Based on the historical data and forecast, Cardano exhibits a clear upward trend. The price has consistently moved above the Bollinger Band center, indicating bullish momentum. The RSI consistently stays above 50, further confirming the upward trend. Considering the forecast for the next week, with prices predicted to reach $0.907 and the current resistance level at $0.823, I recommend a long position. We will enter a long position at $0.797, placing a stop-loss order at $0.733, just below the support level, to mitigate potential losses. The initial target price will be $0.823, aligning with the current resistance. To refine this strategy, we will incorporate the RSI indicator. If the price retraces and the RSI falls below 30, indicating an oversold condition, we will enter a long position at that price. Conversely, if the price approaches the upper Bollinger Band and the RSI exceeds 70, indicating an overbought condition, we will consider taking profits or tightening our stop-loss. The final target price will be $0.907, based on the forecast. This combined strategy leverages both trend analysis and momentum indicators for optimized returns. Based on the historical data and forecast, Stellar demonstrates a clear uptrend, especially with the recent surge from $0.45 to $0.501. The RSI consistently moved above 50, peaking above 80, indicating strong bullish momentum. The Bollinger Bands have been widening, suggesting increasing volatility and potential for further price movement. Considering these factors, my strategy is to implement a long position. The entry price will be $0.47 on July 19, 2025, coinciding with the beginning of the forecast period. A stop-loss order will be placed at $0.45, just below the established support level, to limit potential losses. The initial target price will be $0.532, aligning with the forecast price and the upper Bollinger Band on July 22, 2025. To maximize potential returns, I will employ a dynamic target strategy. If the price reaches $0.532, I will move the stop-loss to the entry price of $0.47, securing profits and protecting against a potential reversal. I will then set a new target price of $0.54, based on the final forecast price for July 25, 2025. This approach allows us to capitalize on the ongoing uptrend while mitigating risk through strategic stop-loss adjustments. The RSI nearing overbought territory suggests a potential pullback, making the dynamic target strategy prudent. This portfolio will be the most efficient of the three strategies. Based on the historical data and forecast, Sui shows a clear uptrend, consistently bouncing off the support price of $3.5 and reaching resistance levels. The RSI indicates that the asset has recently moved into overbought territory, with values exceeding $70, suggesting a potential pullback is possible. However, the forecast for the next week projects continued upward momentum, with prices consistently above $3.8, reaching $4.07. Considering these factors, I recommend a long position strategy. We will enter a long position at $3.8, placing a stop-loss order at $3.5 to mitigate potential losses if the price retraces. Our initial target price will be $4.07 based on the forecast. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. However, given the current overbought RSI, we will wait for a slight pullback towards the middle band, around $3.88, before entering the long position. The stop-loss remains at $3.5. We will then adjust our target price to $4.14, aligning with the upper Bollinger Band. This combined strategy leverages both RSI and Bollinger Bands to optimize entry and exit points, aiming for high returns while managing risk effectively. The portfolio will consist of 60% of the combined strategy and 40% of the RSI strategy. Based on the historical data and forecast, Ethena demonstrates a clear uptrend over the past 2 weeks, consistently breaking through previous resistance levels. The RSI values have been generally above 50, indicating bullish momentum, with recent values nearing overbought territory. The Bollinger Bands also show a widening band, suggesting increased volatility and potential for further price movement. Considering the forecast for the next week predicts continued upward movement, I recommend a long position strategy. Specifically, I suggest entering a long position at $0.37, coinciding with the support level and the beginning of the forecast period. A stop-loss should be placed at $0.359 to protect against a potential pullback, and a target price of $0.428, aligning with the highest forecast price, should be set to secure profits. To refine this strategy, we can integrate the RSI and Bollinger Bands. If the RSI falls below 30 during the forecast period, indicating an oversold condition, consider tightening the stop-loss to $0.37 and waiting for a confirmation of the upward trend before increasing the position. Conversely, if the price touches the upper Bollinger Band, suggesting an overbought condition, consider taking partial profits at $0.414 and moving the stop-loss to break even. This blended strategy, combining trend analysis, forecast data, and technical indicators, offers a balanced approach to maximize potential returns while managing risk effectively. Based on the historical data and forecast, FLOKI shows a clear uptrend. The price has consistently moved towards the resistance level of $0.000137, with recent days showing strong momentum. The RSI consistently above 60 indicates bullish sentiment, and the forecast prices for the next week predict a continued upward trajectory, potentially reaching $0.000159. Therefore, I recommend a long position strategy. We will enter a long position when the RSI falls below 30, which suggests an oversold condition and a potential buying opportunity. However, given the current RSI values, we need to wait for a pullback. If the price pulls back to $0.000124, we will enter a long position with a stop-loss order at $0.000113, just below the support level. The initial target price will be $0.000137, the resistance level. To refine the strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, it signals a strong bullish momentum, prompting us to raise the target price to $0.000159, based on the forecast. Conversely, if the price touches the lower Bollinger Band, it might indicate a temporary pullback, but we will maintain the stop-loss at $0.000113 unless the trend reverses significantly. Combining the RSI and Bollinger Bands, the most efficient strategy is to enter a long position at $0.000124 plus 0, with a stop-loss at $0.000113 plus 0, and an initial target price of $0.000137 plus 0. If the price breaks above the upper Bollinger Band, adjust the target price to $0.000159 plus 0. This blended strategy aims to capitalize on the upward trend while mitigating potential risks. Based on the historical data and forecast, Optimism demonstrates a clear upward trend, breaking through several resistance levels. The RSI consistently remains above 50, indicating bullish momentum, and the forecast prices predict continued growth. Considering the support price of $0.72 and the resistance of $0.812, coupled with the Bollinger Bands showing expansion, I propose a long position strategy. The entry price should be $0.708, coinciding with the first day of the forecast and a slight dip within the recent upward trend. A stop loss should be placed just below the support level at $0.69 to mitigate potential downside risk. The initial target price should be $0.789, aligning with the highest forecast price and a reasonable profit margin. To maximize returns, we will implement a dynamic target price strategy. If the price reaches $0.789, we will move the stop loss to break even at $0.708, securing the initial investment. If the price continues to rise, we will adjust the target price to the resistance level of $0.812. If the RSI approaches 80, indicating overbought conditions, we will consider taking partial profits and tightening the stop loss. This flexible approach allows us to capitalize on the upward trend while protecting against potential reversals, ultimately aiming for high returns. Based on the historical data and forecast, Immutable exhibits a clear upward trend. The price has been consistently increasing over the past 2 weeks, with the RSI indicating a gradual shift from neutral to overbought territory. The forecast for the next week projects continued upward momentum, with prices reaching $0.626. Considering the support price of $0.551 and the resistance price of $0.636, a robust strategy involves capitalizing on this trend. We will implement a combined strategy using RSI, Bollinger Bands, and support/resistance levels. Our strategy will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the support level of $0.551. The entry price will be $0.551. A stop-loss order will be placed slightly below the support level at $0.544 to mitigate potential losses. The primary target price will be the resistance level of $0.636, offering a significant potential gain. Additionally, we will use the Bollinger Bands to fine-tune our strategy. If the price breaks above the upper Bollinger Band, we will consider adjusting the target price to $0.65. Conversely, if the price approaches the lower Bollinger Band, we will reevaluate the position and consider tightening the stop loss to $0.56. This combined approach leverages multiple technical indicators to maximize returns while minimizing risk. Based on the historical data and forecast, Tezos exhibits a clear uptrend, supported by consistently increasing close prices and a rising RSI. The RSI has moved from 44.7 to 77.4, indicating a shift from neutral to overbought territory. The Bollinger Bands have also widened, suggesting increased volatility and potential for further price movement. Considering the forecast prices ranging from $0.681 to $0.762, I recommend a long position. The entry price should be $0.681, coinciding with the first forecast price. A stop loss should be placed at $0.657, just below the support level, to mitigate potential losses. The initial target price is $0.73, aligning with the resistance level. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, oversold, we buy. When the RSI exceeds 70, overbought, we sell. Given the current RSI of 77.4 and the forecast, we'll maintain the long position initially. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. The revised target price will be $0.762, based on the highest forecast price. This portfolio combines the trend analysis, support and resistance levels, and technical indicators for a robust investment strategy with an entry price of $0.681, a stop loss of $0.657, and a target price of $0.762. Based on the historical data and forecast, Pudgy Penguins exhibits a strong upward trend. The price has consistently broken through resistance levels, and the forecast for the next week projects continued gains. The RSI consistently above 60 indicates bullish momentum, with values exceeding 80 on several days, suggesting overbought conditions but not a reversal yet. The Bollinger Bands have been widening, confirming volatility and the upward trend. Considering these factors, I recommend a long position strategy. The entry price should be $0.0319, coinciding with the recent price action and the start of the forecast period. A stop loss should be placed at $0.0299, just above the established support level, to protect against a potential pullback. The initial target price should be $0.0345, aligning with the forecast high for the week. To refine this strategy, I will incorporate the RSI and Bollinger Bands. If the RSI falls below 20, indicating an oversold condition, a long position should be initiated at the prevailing price, with a stop loss just below the lower Bollinger Band and a target price near the upper Bollinger Band. Conversely, if the RSI exceeds 80, suggesting an overbought condition, consider exiting the current long position or shorting the asset. Combining these signals, the most efficient portfolio would be a long position with an entry price of $0.0319, a stop loss at $0.0299, and an initial target price of $0.0345. This strategy leverages the prevailing upward trend while incorporating risk management techniques based on technical indicators. Based on the historical data and forecast, Pendle exhibits an overall upward trend. The price has consistently tested and bounced from the support level of $4.29, while approaching the resistance level of $4.65. The RSI readings, fluctuating between 42.8 and 67.6, indicate periods of both oversold and overbought conditions. The Bollinger Bands show periods of volatility, with the price occasionally touching the upper and lower bands. Considering the forecast prices, which predict a continued climb, I recommend a long position strategy. We will use a combination of RSI and Bollinger Band signals to maximize profit potential. The strategy involves entering a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Based on the recent data, the RSI is currently above 50, so we will wait for a pullback. When the RSI falls below 30, enter a long position at $4.2. Place a stop-loss order at $4.1, just below the support price of $4.29, to limit potential losses. Set a target price at $4.6, slightly below the resistance level of $4.65, to secure profits. This strategy combines RSI and Bollinger Bands to identify optimal entry points and manage risk effectively, aiming for high returns in an upward trending market. Based on the historical data and forecast, Dogecoin shows a clear uptrend. The price has consistently moved upward, breaking through resistance levels and exhibiting strong momentum. The forecast for the next week predicts continued growth, with prices reaching $0.259. Considering the RSI values, which have been consistently above 50 and nearing overbought territory, and the Bollinger Band showing the price moving towards the upper band, the overall trend is strongly bullish. Therefore, I recommend a long position strategy focused on capitalizing on this upward momentum. My strategy will be a hybrid approach combining RSI, Bollinger Bands, and support/resistance levels. We'll enter a long position at $0.222 on July 19, 2025, coinciding with the first forecast price and a relatively low RSI value compared to recent days. The stop loss will be set at $0.202, just below the established support price, to protect against a potential pullback. The initial target price will be $0.251, the recent resistance level. If the price breaks through this resistance and continues upward, we will adjust the target price to $0.259, aligning with the final forecast price. This strategy balances risk and reward, leveraging the bullish trend while incorporating protective measures against downside risk. Based on the historical data and forecast, Uniswap exhibits a strong upward trend. The price has consistently been moving towards the resistance level of $11.1, and the forecast for the next week indicates continued growth. The RSI values have mostly been above 50, with recent values exceeding 60, suggesting bullish momentum. Furthermore, the price has frequently touched or breached the upper Bollinger Band, confirming the upward trajectory. Therefore, I recommend a long position strategy. Entry price will be $9.27, with a stop loss set at $9.6 to protect against potential pullbacks. The initial target price will be $10.3, aligning with the forecast for July 25, 2025. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 30, it signals an oversold condition, and when it rises above 70, it indicates an overbought condition. Considering the current RSI around 68.8, we are approaching overbought territory. I suggest a tiered target approach. If the price reaches $10.3, take partial profits and move the stop loss to the break-even point. If the price continues to rise, set the next target at $11.1, the resistance level. This layered approach maximizes potential gains while mitigating risk. This strategy combines trend analysis, RSI signals, and Bollinger Bands confirmation to provide a high-probability trading opportunity. Based on the historical data and forecast, Ethereum Classic exhibits a strong upward trend. The price has consistently moved higher, supported by increasing RSI values and expanding Bollinger Bands. The RSI reached an overbought level of 83.0 on July 18, 2025, suggesting a potential pullback, but the forecast indicates continued upward momentum with prices ranging from $20.9 to $24.5. Considering this, I recommend a long position with an entry price of $20.9. A stop loss should be placed at $19.5 to protect against a potential short-term correction. The initial target price is $23.8, aligning with the forecast high and providing a reasonable profit margin. To maximize returns, we will use a dynamic strategy. If the price reaches $23.8, we will move the stop loss to the entry price of $20.9, securing a risk-free profit. If the price continues to rise, we will set a second target price of $24.5. This strategy combines the strength of the upward trend with risk management techniques, ensuring a high probability of profit while minimizing potential losses. This portfolio is the most efficient of the three strategies because it takes into account the trend, RSI, and Bollinger Bands.